Day trading is one of the most profitable skills that any individual can acquire. However, it also comes along with a couple of very emotionally volatile traits, including this idea of FOMO. If you want to be a consistently profitable day trader in the stock market and able to actually reap the rewards that you hear people talk about online all the time, you are going to have to master how to control your FOMO. And in order to master it, you need to understand what it is, understand when you are feeling it, how to avoid it, and how to keep it out of your trading entirely. So in this video, I'd like to break that all down for you, as well as dive into the charts and show you some examples of how I dealt with FOMO over the course of the last 2 days. First, what is FOMO, right? What is it? What does it mean? What does it stand for? What are you talking about, Jake? FOMO stands for fear of missing out. Now, first, let's talk about this just in some real life examples, right? Let's say, for example, that all of your friends are going to a party and you happen to be busy with work that night, right? Or your family happens to be getting together for a dinner and you cannot make it because you have conflicting plans or whatever the case may be. At some point on during the night when your friends are at a party or your family's at a gathering and you aren't there, you are going to have some fear of missing out of what is going on there without you. It's in our human nature to not be comfortable with things happening without us, right? So when things are going on and we are not there to enjoy it, to take part in it, we generally as human beings have this feeling of FOMO, where we are unhappy that we are missing out with everything that is going on. Now, when it comes to trading, FOMO can be thought about in a bunch of different ways. The most popular real life example that many of you, some of you who have never even heard of day trading before will be familiar with is with Gamestop. A few years back, Gamestop went on an incredible short squeeze run where it ran from like $3 a share all the way up to like $300 or $400 per share, right? Now, in the stock market, a penny stock having a short squeeze actually isn't all that surprising. It happens on a relatively frequent basis. These big ones happen a few times a year. However, to everyone on the outside who was not a day trader in the stock market, the GameStop explosion was completely out of this world. It was because it was a household name that people were familiar with that all of a sudden this became more publicized news. Everybody started to be talking about it. And most people didn't purchase GameStop at $3 or $4. They didn't purchase it at $10, at $50, at $100. They didn't purchase it at $200. They waited until it reached about $300 or $400 in stock price before they got that call from their friends saying, hey, if you don't get in now, you will never catch the run all the way up to 1,000. It's going to 1,000. You got to catch the run up to 1,000. And in your head, you think, even if I buy at 300, why does it matter? It's going to 1,000. Irregardless of everything else that was taking place fundamentally with the company or technically on the chart, it was the fear of missing out that drove people to make an irrational purchase on GameStop at a significantly too high of a price. Now, that's a really broad example, but for most of you watching this video, you have some day trading experience, and you all likely have experience with FOMO on a much deeper level than just with purchasing GameStop a little bit late. The reality is when it comes to day trading is that FOMO can be seen in a variety of different ways. I would like to give you 3 real life examples of FOMO that I deal with on a daily basis and eventually break down how I ultimately negate those feelings of FOMO. So first up is what I call pre-market excitement. Essentially, when you get too excited pre-market, creating a trading plan, that you get so eager for what is going on in the market that day that you cannot wait at all and you force your way into a variety of trades as soon as the market opens, right? For me, what this generally stems from is I'm watching a variety of different stocks at that morning, pre-market, right? And in my analysis, I find that there is a stock or two that has the opportunity to make a rather large move that day where I could potentially make a large profit. Right? Now, if I find myself getting too excited pre-market and too hyped up and too anxious almost to enter that trade, usually what happens is that as soon as the market opens, I slam the buy button with too much aggressiveness and it doesn't go well, right? That for me would be an example of what I call pre-market excitement FOMO and how it can be a hindrance to somebody as a trader because most of the time, buying at market open doesn't work. And it works every now and then, but the vast majority of the time, it does not work, right? So the first type of FOMO you can think of when it comes to day trading is that pre-market FOMO, that pre-market excitement about particular stocks or setups. Now, the second type of FOMO that day traders deal with on a frequent basis is what I call FOMO of money that they haven't even realized yet. I don't know about you all, but when I am in a trade and I watch my profit and loss as that trade is fluctuating, I start to have FOMO about what is going on with the dollar values in that trade. For example, let's say that I'm in a trade and I'm up $300 on that trade. As I'm up $300, if I'm watching that dollar value fluctuate, if it drops down to $250, I suddenly will start to feel FOMO. I will feel FOMO in the sense that I feel like I should have been up $300. And all of a sudden, I then start basing my decision-making process off of that dollar value rather than off of what the chart is telling me to do. So instead of making a rational, logical decision following the chart, I'll make an irrational, illogical decision, adding on back to my trade or exiting without a purpose, without a reason, and ultimately selling myself short on that trade just because I felt the FOMO of not making as much as I saw during my P&L peak. This can be one of the most deadly triggers in all of trading, as it can push you into what I call the loop. Now, if you're not familiar with the loop, I recommend that you check out a video on my channel called The Best Trading Psychology Strategy Out There. There are 2 parts to them in which I do a deep dive on the loop that further explains this type of FOMO that we deal with on a daily basis as traders. Now, the third type of FOMO that we deal with frequently as day traders is what I call FOMO after the fact, right? Essentially, what happens is when you close a position early, for whatever the case may be, whatever reason caused you to close it, whether it was FOMO of losing those profits, whether it's that you had a tough couple of days and you wanted to lock a winner, whether it was FOMO because you were unsure of what the market was going to do, there was a news event coming out and you didn't want to risk it, whatever the case may be, FOMO after the fact can put you in an extremely tricky spot to potentially harm your account later on. FOMO after the fact references when you close a trade for whatever reason you decide, and then you proceed to stare and watch that trade make a move without you, right? Now, sometimes what will happen is you'll exit a position, it will continue to go against you, and you'll be happy that you made the exit that you did, right? However, oftentimes what will happen as a trader is you will exit, and that trade will continue to work without you. That's a hurdle that you will always have to deal with as a trader. You will never be able to time the tops and bottoms perfectly. So instead, what you have to do is master the way that you personally feel. That way you do not feel so much FOMO after the fact that you end up putting on a significantly larger risk on your next trade. This ties us back into that loop video I was talking about, where you can really start to see these types of FOMOs trigger off of each other, right? Where you have FOMO where you don't want to miss out on the money that you are up, and so you close a position, which leads you into FOMO of closing that position early, and you now have to watch it run without you, right? All 3 of these types of FOMO, pre-market excitement, FOMO selling early to make sure that you don't lose any more money or that you don't give back any profits, and FOMO after the fact can all be extremely deadly and can blow up your account with one single trade. So understanding what they are is the first step in preventing them from blowing up your account. Now that we've talked about a few different types of FOMO, let's start to talk about how you can actually identify this as you are going through it on an individual given day. Now, first thing that you will generally start to feel as you are going through FOMO is this certain level of anxiousness, right? You'll start to feel uncomfortable with the position that you're in. Now, whether that's a sign of you having FOMO of a position or whether that's a sign of you using too much position, ultimately the end result is the same. You are not truly comfortable either watching the market that day or being in the trade that you are in, and you start to feel yourself getting anxious. And it usually doesn't stop there. Really what FOMO is the culmination of several different emotions coming together all at once, right? You are feeling that anxiousness. You are feeling a certain level of greed, a certain level of entitlement that you have to be in this trade. You must be getting the profits that come with this potential trade. And ultimately, what it leads you into is what I refer to as a heightened state of emotional vulnerability. Basically, any single one thing that happens on a chart could start to trigger you and start to make your trading actions irresponsible, right? One little red candle on something as small as the 1 minute time frame could cause you to fully go against your plan because you are in this state of heightened emotional vulnerability, right? So in order to understand that you are in FOMO at all, the first thing that you need to do is understand these emotional triggers when it comes from anxiousness, restlessness, tapping, and uncomfortableness with your position. But I'm going to be honest with you all. Most of the time, gang, you know when you're feeling FOMO. There isn't going to be somebody that can sit there and tell you exactly how you are feeling in that moment. At some point, you are going to need to become in tune with your emotions and understand how you are feeling right then and right there. But the truth of the matter is, most of the time, when you're feeling FOMO and you're not in a good headspace to trade, you know it. I mean, you know it. If you really think about it, you know it, I know it, we all know it. When we're not in the right headspace to trade, we know it. It's usually that we just try to trade through it. So the first step is identifying what those triggers are that can put you in that state. The second step is understanding that we as human beings have to know ourselves and be able to identify and really just accept that we are in that state where, hey, I have so much FOMO right now that it is not a good decision for me to trade. I should take a step back. Regardless of what I miss, I'll come back with a fresher mind tomorrow. Now, we've talked about a variety of different types of FOMO, how they affect you mentally, how you can start to identify them. Now let's talk about how you can avoid FOMO as a whole. As a day trader, there are a few very specific things that you can do that can help completely eliminate FOMO from your plan, right? Or from your trading as a whole, I should say. And I got a little ahead of myself there because the first way that you can avoid FOMO is a morning plan. And yes, I know this may sound simple, but at the end of the day, this is one of, if not the most important things that a trader can do. The reality is that if you are trading without a morning plan, you're waking up late, you're showing up to the market and just hoping to find a trade that suits your trading system with no pre-market plan, you are likely trading very chaotically and inconsistently. The best of the best traders always, before every single trade that they take, have a very concrete and defined trading plan that allows them to enter that trade. Now think about it, right? In theory, as traders, if we can create our own trading plan that will allow us to either enter a trade, take a small loss, or get a small, medium, or big size win, in theory, that's all we need to do. We just need to create that trading plan and then adhere to that trading plan. So I know it may sound like, Jake, you make it sound so simple. I promise you, having a morning trading plan is that essential to your success as a trader and to avoiding FOMO as a whole. The reality is that if the trade doesn't set up exactly as your morning plan describes, you shouldn't have been in that trade in the first place, right? So a lot of people tend to struggle with FOMO on trades that they would never actually have been in the first place because it wasn't part of their morning plan. So the first question you should ask yourself is when you are starting to feel FOMO is, was this even part of my plan? And if it wasn't, then you have to immediately cut your FOMO out at the get right away. Now, when it comes to a trading plan, having the actual strategy portion of it down is its whole beast in and of itself. If you don't have a current trading strategy that you use, I recommend you check out my free day trading strategy video. It is one of the most thorough videos I have ever done. You can go ahead and check it out on my channel. It will help you define a strategy. However, that's only one part of the equation. The second part of your morning plan has to be your risk levels. Prior to the day starting and prior to you entering any position, you need to figure out what is your max position size risk that you are going to use on a trade? What is your max stop loss risk that you would actually exit that trade at? What is the target that you are aiming to make on that trade? And what are you going to do to ensure that you actually follow all of your rules when entering that trade? So the part of our morning plan to avoid FOMO begins with creating a technical plan. I would look to long if X, X, and Y happens. I will short if Y, Y, and Z happens. Next up is creating your risk plan. I'm willing to risk X, X, and Y in hopes to make Z, Z, and B, right? Now, by defining that morning plan, all of a sudden you have created some extremely structured parameters that will allow you to trade without the threat of blowing up as long as you can adhere to that plan and to those rules. And if you can adhere to those plan and those rules, over time, you will make money. On certain days, you might miss certain moves that get a large movement in one direction where you could have made a significant sum and you have a lot of FOMO over that. But what I can promise you is that over the course of time, if you routinely follow your morning plan through and through with discipline, you will succeed as a trader. The most struggling part about trading, the most difficult part, is actually following that morning plan on a daily basis. Now, another thing that you need to do in order to avoid FOMO is to have some very clearly defined trading rules for yourself. Now, in the description, we are going to have my list of trading rules. And if you are interested in getting access to my entire list, it's just a PDF, you just go ahead and click that link. It'll take you exactly where you need to go in order to create your own set of trading rules based off of what I wrote. I highly recommend that you do not just copy exactly what I have as my personal trading rules. I recommend that you use them as a base and build your own trading rules off of them. But just the process of having trading rules alone will help you follow your trading plan and not feel FOMO on a significantly higher level. Now, one last tip that I have for avoiding FOMO would be to stay out of the P&L channels of Discords. Yes, I have a Discord, and yes, we have a profit and loss channels where people frequently post. And I definitely encourage you to post there, to inspire, to help mark your own journey and to kind of highlight the recent successes that you may have had. However, what I do not recommend you do is sit there and scroll through and watch how much other people are making. While I know it may be inspiring and I know you may have friends in there that you want to cheer on, at the end of the day, the last thing you want to do is look in those channels and start to feel a massive amount of FOMO because you aren't making as much as another person. You never have any idea how much another person was risking, what exactly they were doing on that trade. So you don't want to try and take the money they've made and compare it to the money that you are making, right? So if you're in a Discord community, whichever one it may be, I personally believe Rake Trades is the best, but I am a little bit biased. I would avoid the profit and loss channels as much as possible just because you don't want to be inciting FOMO within yourself, but just by watching some of your peers succeed, right? It usually doesn't end in a positive result for you, right? Now, in the last portion of this video, what I would like to do is dive into the charts a little bit and talk you through how I avoided FOMO over the course of the last few trading days. Let's get into it. Now, the chart that you're going to see on the screen at this moment is a 5-minute chart of the S&P 500 futures. And yesterday, as of the recording of this video, we had a massive move up in the markets. We moved from 44.35 all the way up to 4,500 in one day. Now, I won't lie, this move was a little bit unexpected, and the vast majority of traders that I know dealt with large amounts of FOMO because they didn't make nearly as much as they would have hoped on this move up, right? Now, one thing that I will state personally is that I was dealing with a whole lot of FOMO. Based on the trading system I used, there was 2 potential entries that I could have taken earlier on in the day. I could have looked for longs on this 1, 2, 3 pattern over the first level down here at 44.4650. I could have taken a pullback entry here on a potential higher low with a very tight stop loss that would have been very clean here at this oval, right? And I missed both of those. So I watched the market move for the first essentially hour and 45, 2 hour and 30 minutes of the day without me, right? I watched the market make a giant, massive move without me. And you can bet I had a bunch of FOMO throughout that process, right? It truly was, oh my gosh, letting a fire in me that's like, oh my gosh, I'm missing such a great move right now. But personally, what I chose to do was stay as patient as possible. I tried to stay as patient as I could and follow my trading system, right? The trading system and trading strategy that I use looks for level-to-level moves, trading with the trend, right? And so as we moved up into our next level here, I was starting to pay attention to what I thought could happen next, right? Now, originally, I didn't think we were going to get past this 44.7250s, but with the strength that the market was showing overall yesterday, what I decided to do was wait and see how it held on pullbacks. Now, during this oval here, what you can see is that the market actually, 2 separate 5-minute bars, it did this. It formed what we can see now acts as a potential higher low. During the potential higher low is where I took my entry on SPY calls here and was able to ride this trade up for about 140% profit. Now, I did exit a chunk of those before we got that return, but my overall return on the trade was over 100%, and it was over 4.5x what I was risking on that trade. So I risked 1 to make 4.5 on this particular trade setup. So despite the fact that I felt a ton of FOMO from missing this early morning move up, I stayed patient, I stayed calm, I stuck to my strategy rather than flipping strategies and saying, there's no way the market's going to go higher, I'm going to short it, blah, 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 blah. I stayed calm, waited for my entry, and entered a position here and caught the entire move up, right? Now, on this particular day, I was able to capture a move and make about $41,000 total realized on the day. It'll show 46, it's really 41, right? A realized total of $41,000 off of this trade, and then a couple of other scalps that I had later in the day. Buying here, selling there, buying here, selling there. But those weren't my best trades. This was hands down my best trade, right? Now, after having a whole lot of FOMO from not making more, I know 40, that might sound like a whole lot of money. It is a whole lot of money, but truth be told, with this move, in my position sizing, I probably should have made $150,000, $200,000. So I felt like it was an underperformance. Again, I understand these numbers are staggering, but I've been doing this for 6 years. I trade with big size, right? For me personally, I felt like a bit of an underperformance. So I came into today with one level in play, 44.92.25. And for me, because of how emotionally volatile yesterday was, I came in with a very concrete trading plan. ES, the market that I was watching, had 2 levels, one at 45.36.75, one down at 44.92.25. I told myself that I am not trading until these levels get tagged. I'm not going to trade the S&P 500, right? And for me, this was FOMO prevention more than anything else. I did not want to get myself in a position where I was putting on too much risk without following my strategy, which is the level-to-level strategy, right? And I actually think this level isn't accurate and updated. I believe this level was 44.97s. Which it did test, yes, because it did test pre-market. But we never got the intraday level test, which means I sat out trading the SPY entirely today. But for me, the way I look at it is that FOMO is one of the biggest killers out there, right? How many times have you been in a position where FOMO in some type of way, shape, or form, whether it be in revenge trading, pre-market FOMO, after the fact FOMO, whatever type of FOMO that you dealt with that caused you to take a big loss, right? If you could go back in time and avoid that, wouldn't you? And that is what I chose to do today. I chose to sit back patiently. I chose to wait for my strategy, which is the level-to-level system, to play out. And if we didn't trade either of these levels, I was going to wait patiently for a new setup to present itself. Later on in the day, I did take an entry on snow. That one worked out. It was a small winning trade in the late afternoon. Not much I would count towards really anything, right? But the reality is that I didn't need to make a lot today. I caught a really nice trade yesterday using the system that I know works, where we trade from one level to the next level. I know it works. So if I know that it works, I'm going to wait for that system and that strategy to play out and work. And here what you can see is that it never actually triggered anything off of either our 2 levels, right? So if I want to go back in time and save myself a headache, I'm not going to trade until one of our levels trades, right? Now you may be thinking, Jake, wasn't there an opportunity to make money within this range? Couldn't you have gone long here on this potential higher low? Maybe even shorted this move or bought the dip here? Whatever the case may be, absolutely. You definitely could have made money today. I'm not saying you couldn't have. I'm not saying you could have used a different strategy and made money off of it. I'm not saying that. But for long-term success as a day trader, you need to find a strategy, stick to it, and truly adhere to it. That way you are not frequently feeling FOMO on a regular basis. And if you did not stick to your strategy today, I'm sure there are plenty of people who got caught trying to go long up here and ultimately ended up eating a giant stop loss on their position just because they had so much FOMO, even though their strategy didn't play out, right? So to be a successful day trader, what you are going to have to do is start to run through the definition of FOMO, the feelings that start to trigger FOMO within you, how you can avoid that with your trading plan. And when you are in that moment, when you truly know you are in that moment and feeling FOMO, that's when you have to stand up, step back, and get away from the screens before you do some serious damage to your account. I hope you enjoyed this video. Let me know down in the comments what you would like to see next for us. And if you have any questions, make sure to check the description about what Rake Trades has to offer, including our Mastermind 12.0 waitlist.